It's time to talk about your money, and we continue a series discussing how impactful it can be financially if you start investing at a young age, even by a little. Here to help you with those conversations with your kids, financial expert Corey Reamer with the Welsh Group. Good to have you with us this morning.
Hey, good morning. Good to be here.
Before we jump into that, of course, we got to talk about the tariffs. The markets were down yesterday. Stock futures already stressed again this morning. What do analysts expect to happen?
Well, I think there's just a lot of uncertainty about how this is all going to play out in the long term. And I think that the markets have had a pretty good run over the last couple of years. We've seen the entire market across the board really have a lot of success. There's some feeling that companies, in terms of the multiples that they're trading at, might be a little bit overvalued. So this could be a little bit of a correction that would be expected with the values that we're seeing today. But I think the biggest thing is the uncertainty of how this is going to play out. Whenever you have moves like this from an administration, there's usually what happens is a flight to safety. So you get out of risk assets and try to get in assets that are a little bit more safe. They move into bonds, to treasury bills, bonds. And so I think that's what we're seeing happen. Some of these traders that are out there that have a lot of exposure to equities are starting to move into some safe haven assets just to try to protect, to see how this all plays out.
But this does tie into what we want to talk about. This is the digital age, and I don't know if you've already had these conversations with your kids, but about trying to get into investing for the long haul, because you're going to have these dips.
Yeah, absolutely. This is just a part of investing. You look back over history, there's been tons of moments where we've had huge slides in the equities market, but over time the market has rebounded and corrected and continued to grow. So this is a good opportunity for you to teach your kids about the long-term thinking. This is an opportunity where you show, you don't react on emotion, you invest in good companies, you ride this out, and historically the stock market has continued to rebound.
We got to hurry, but start with the basics. Like, I don't know if you've already talked to your kids. What are the basics?
Yeah, we're working on savings and thinking about things where it's not instant gratification. Let's put our money to work, put it in something that has an opportunity to grow over the long term. And this is not something that happens overnight. Set something that they're wanting to purchase or have a goal out there in mind. There's different apps they can use that can really help with kids. Greenlight, Acorns, Stockpile allows to buy fractional shares of stocks where they can invest, choose from companies that they might know, like a Disney, a Nike, an Apple, something that they see in their everyday life. Let them do the research and let them choose and see how those investments do over time. It's a lot of fun. Make it interactive where the kids enjoy it, where they can also see how their performance does.
And when they learn compound interest, I mean, that really sets them up for a long time, but they just do a little, right?
Yeah, absolutely. It's a concept that a lot of people just don't understand even when they get to college age. So if you can start training them on it at this point, it's really beneficial for them to understand how it really impacts their money if they leave it in their accounts and let it invest for the long term, how quickly it grows more than you can just leaving it in, say, a savings account instead.
Corey Reamer with the Welsh Group. Very important to start those conversations early with your kids. Thank you very much.
Hey, appreciate it.
All right, we'll be right back.
Do you have mold and wood